Okay, our market master is with us. Dhiraj Agarwal is Managing Director at Ambit Capital. He's joining in to take some questions. Dhiraj, good to have you with us here.
Hi.
Good to see you here in our studios.
Hi.
Thanks
nice
very
to
much.
Be here again.
Market looking good, Dhiraj? Good for more?
Yeah, markets are looking good. It's been two markets actually, right? So large caps have been mostly range bound and the mid caps have been tearing away. But yeah, looks like there is more to go. I don't think it's in a bubble zone yet.
Funds that you speak with, is anyone sitting on a lot of cash? Or I'm saying, are people holding? I spoke to someone yesterday, not a large fund, said that they're sitting on some 22-23% cash.
I think
people are taking longer to put the money to work. That is true.
Yeah.
But just your feedback.
Cash levels are high at this point of time. People are a little worried. So typically, whenever this phenomena happens, that the mid caps outperform the large caps by such a large amount. Historically, it's not ended well. So memories of 2016-17 are coming back. In fact, the NSE mid cap ratio to Nifty ratio has surpassed 2017 high, just by a margin. But it has. Small cap to Nifty ratio has still not surpassed 2017 high. So that's causing a little bit of worry that have we run too fast too soon, because the mid cap indices are up more than 30% in the last 5 or 6 months. So that's worrying people a little bit. But it's almost like that when you go on a long drive with a 5-year-old and they keep on asking, are we there yet?
You start a 10-hour journey and within an hour they say, oh, we're almost there.
Yeah. You manage your expectations, basically. That's what you do, right? Yeah, we're used to that. Dhiraj, thanks for being here in the studio. How are you approaching it in the mid-cap space? Because anything and everything is rallying, right?
That's right.
And so a lot of new sectors are coming up. The old the laggards are also coming back, whether it's sugar, capital goods, defense, aerospace, anything and everything. So how do you sift the wheat from the chaff, and what are the pockets to look at now?
So that I think is the most important thing at this point of time, because it's very easy to get carried away. In the short run, everything is moving and stocks are reacting a lot to news flows. So even without giving any consideration to what the impact of the news flow on the earnings is. So something which might move the earnings by 2% or 1%, but the news flow, the headline seems interesting and the stocks are moving 20 and 30. So it's very important at this point of time to actually focus on companies which can deliver long-term earnings growth, which are focusing on capital allocation, and where the valuations are not sky high. And I think you can find ideas across sectors at this point of time. So it's very difficult in the mid-cap space to either pick a theme or sectors. It's more company-specific. A number of spaces are doing well, as you rightly said. Capital goods, there are orders coming in. Infrastructure, railways, orders coming in. Defense is doing well.
But these spaces have rallied a lot also, right?
Yes.
So I guess that alpha is something that you may not be able to create from here on. My question more is, from here on, where do you see both value as well as growth?
So, for example, we are at the margin constructive in chemicals. The sector has corrected quite a bit. There are signs that the chemical prices in China are rebounding in the last 2 or 3 weeks. Valuations have cooled off from the peak. So that's one example of a space to look at. There are a number of mid-cap banks and NBFCs at this point of time which have underperformed the market in the last few months in offer value. So because of the rotational nature of the market, you can always find pockets which are not so red hot in the short run and where there is value. Defense, yes, I agree. It's looking a little bit of overheated scenario, despite the fact that the business numbers are good. And so could many of the classic capex players could be. And there are early signs of that. ABB and Siemens have stopped performing, for example, in the last month and a half. So the large cap space, the large cap stocks in that space, which are also in a tier, and ABB YTD has done pretty well, 40-45% up. But if we see last 2 months, it's been broadly flat. But the mid caps are still running away.
All right. Hi, Dhiraj. Good to have you in the studio. Dhiraj, you briefly mentioned about banks and financials as well. Some of them are still offering value and some of them have underperformed. What comes to mind is Kotak Mahindra Bank and HDFC Bank. They haven't really participated in the party. Do they come onto your list? In the past, you have mentioned, I think, that ICICI Bank gets preference above them.
Yeah.
But do you think the time has come now for a longer-term investor to allocate some money to well-run banks?
When I say it's a well-run bank.
No, to these two in particular, because they have underperformed.
That's true. One other favorite thing which I think I mentioned in the studio last time when I came here of mine is convergence.
Yeah.
So 2014 to 20 was a period of divergence or dispersion. Right now, we're going into a period of convergence. And there's convergence between large caps and mid caps, there's convergence between stocks within a sector or companies within a sector, and largely driven by fundamental shifts, right? So, at this point of time, we've actually compared the matrices of the top 4 large cap banks. They look very similar.
Okay.
And the valuations are converging. I think they could converge a little bit more. So, even for some more time to come, I think Axis and ICICI could end up outperforming the other two.
Okay, Axis and ICICI could end up outperforming. Where else? You said you like chemicals because that space has, of course, been beaten down quite a bit.
Yeah.
So some of the laggards are coming back. Any other themes that look good for you? EVs are picking up in a big way. Sugar is coming back in a big way as well.
Yeah,
anything?
I don't know much about sugar, but I mean, there are a few spaces like that. So select automobiles. I mean, I've been very positive on automobiles for a while. We've talked about this every time. And
which are your top picks now?
so automobiles, I continue with Tata Motors, Eicher, TVS. So same names. Few of them have consolidated for a while. Eicher has consolidated post the Harley-Davidson news. But the longer run, I think is still do well.
Any of the EVs that you like, especially the EVs who are getting orders from, state transport undertakings, whether it's the JBM Autos, Electra Green Techs of the world, not just in the bus space, but even on the two-wheeler side, something like an Endurance, Farrak?
I'm not that well versed with those smaller names.
Okay.
I would just sidestep that question. But within that, we like TVS. I mean, the TVS EV, 2EV market share is now pretty much industry leading at this point in time. They've caught up really well in the last few months. So that's one structural OEM story, which is also an EV play that we really like.
You guys have put out a note on CDSL this morning, I think, initiating coverage. You want to talk about that? I mean, what's the play? Why do you like that?
No, I'm a little out of touch on that. Yeah.
Okay. By the way, Sonia, you were talking about railways, right? Vivek put out a link and we'll kind of revisit that yesterday. The FY25, that is 1 year forward earnings expectation, P multiples are actually only, I was surprised, 19-20 times.
Okay.
I mean, that's very rare, right? I mean, that is on the lower end of what you're used to. Otherwise, it's 30, 40, 50 times. But even after these stocks going up 3, 4, 5x, I mean, they're not, I mean, if the tailwind is there and it's all about execution, I mean,
But
they're not
depends
wildly
also on what the
expensive.
historic multiples are, right?
Yeah, that's true. I mean, PSUs don't usually command very
Give you
high
very
P
high
multiples. Any thoughts here?
I would say historic multiples have a limited role to play here because especially if the growth curve changes in a dramatic fashion. So historically, if you see many of the PSUs have not really grown at a very fast pace. So if the current growth rates are significantly higher as compared to its own history, multiples can re-rate much higher. Second thing which is to be kept in mind is growth with respect to its own history, also with respect to the market. I mean, let's take the example of a different sector. So consumer names with only 14, 15, 16% kind of earnings growth got re-rated between 14 and 20 from 30, 40 times multiples to 70, 80 times multiples. Last time they probably traded at 60, 70 was in 90s when earnings growth was 28, 30. But this current 16% earnings growth rate compared at that point of time to 7% of the Nifty. So similarly, if let's say if there's a PSU, for example, growing at 20% compared to 11, 12% for Nifty, that's pretty good. And hence, some of the historical comparisons in P will actually fade and not work. It didn't work for consumers. I mean, consumers could have looked very ridiculously expensive compared to historical Ps in 16 or 17, but if you got out, you missed the bus.
Yeah.
What about the QSR theme? We briefly discussed that the last time you joined in here. What do you think? Have you had a closer look out there? I think something that's an ancillary is Zomato, and you're quite positive out there. So any view on QSR and updated view on Zomato? They had some shares to sell, a big fund out there, and it got lapped up.
Yeah. So Zomato is a big challenge to QSRs, right? Because it offers you variety.
Yeah.
It offers you choice as compared to sticking to one particular kind of food, etc. And that's what I think I broadly mentioned. We were comparing Jubilant to Zomato last time when I was here.
Yeah.
So pretty much still maintain that. I mean, there may be one or two smaller QSR players looking attractive at this point, but as a theme,
you'll prefer Zomato.
Somebody like Zomato is probably.
Any view on Paytm? They came out with their update today. look pretty okay. Any view out there?
No, don't have a view on Paytm.
No?
Do you track any of these entertainment, gaming companies? Nazara Tech has been in the news. PVR has come back in a big way. Delta Corp, of course, has its own issues. But any of these that you like?
No, I don't track it, but gaming is a high-growth industry worldwide. Gaming and entertainment is a high-growth industry worldwide. So I read an interesting news last week that Taylor Swift shows in the US plus Barbieheimer, just these three entertainment events added 0.6% to US's quarterly GDP.
Wow.
So that's
Taylor Swift is an economy in herself, right?
0.6% to 0.6%?
0.6% to US's quarterly GDP.
Quarterly, okay.
Yeah. Yeah,
Wow.
not the annual GDP, quarterly GDP. so that should tell you how large gaming and entertainment industry is now becoming.
You're reaching that point where you may have to pay for that ticket, by the way. Take your daughter to a Taylor Swift concert.
Well, not likely.
All right, but Dhiraj, always great speaking with you. Thanks for joining us.
Thank you so much.
Okay,
Thanks.
and thanks for being here in the studio.
Sure. Bye.
Okay, well, let's move.